How's Pete?
Hey, how's it going, Alec?
Stephen. Let me put this on and I can hear you properly. How you doing, man? Hello, Stephen.
Well, thanks. Can't complain.
Yeah, I'm nice to see you here. Stephen, nice to see you too.
How's it, Alec? How's it, Pete?
Hey, Stephen, I see you dressed up for the occasion. Nice, man. It's good.
Thank you. Not quite as dressed up as Justin. I'm all right, Alec. As we'll see in a minute.
I'm okay.
Well,
it's a content that counts. It's a content that counts, not the packaging.
You know,
it's 90% presentation, 10% content. People, they'll forget what you said, but they'll remember how you made them feel.
Yeah. Blue t-shirts make them feel good.
Am I okay, Alex? Should I put a t-shirt? Should I put a collared shirt on?
Of course you're fine.
Stephen, Alex lucky. Normally I just start a tee. Today I'm actually wearing a collared.
Now you made me feel more under.
No, you're absolutely more than fine. More than fine. We, this is still, it is going out on YouTube, but it is still very basic. When we get to our new studios, which hopefully is going to be on the 1st of May. I say hopefully because it doesn't look like it's going to be. There's there's a lot of work to be done to get the studios right. But then we'll have proper cameras and we'll be doing a proper, almost like not a TV show, but it'll certainly be a lot smarter. So then but it looks like we're going to have to move to Cape Town. I mean, the way everything's happening in Cape Town now, cheapest.
It's all happening. It's all happening.
Amazon. Did you see the Amazon story today?
Yeah, that's big news.
Wow. Unbelievable. That's unbelievable. 19,000 people. You're talking about a different. Anyway.
Look, Amazon is already here. It's not like I think they're just building a new building, but they're already here. They're already occupying some buildings that I know of, and I know my son's girlfriend used to work for them, so they're here. So I don't think it's 19,000 new jobs, but there'll be a lot of extra jobs. Yeah, that's for sure.
But you got to be worried if you Naspers, because Takealot hasn't made any money yet. So now Amazon's properly coming into the country.
Yeah, but I think it's for their it's support for the global businesses, AWS and kind of back office client support and
call center, that sort of thing.
Yeah.
You don't employ 19,000 people in call centers. It doesn't matter how busy you are. That's a statement of intent. No, they're going to come and start competing with Takealot.
Well, competition is good. Competition is good. Yeah.
Oh, it's great for the public, isn't it? Yeah.
Yeah, for sure.
Okay. I'm just looking for a coggle, and then we're away. Ish. Okay. And I don't suppose you guys have been following the soccer stuff. I mean, that's just crazy what's happening there in the UK with
the soccer clubs joining the new Super League.
Yeah, the breakaway. It's I mean, they are so angry. The Engels they're very, very cross. Okay, so tonight you've seen the running order, guys. Have you? We got Pete Maton. Corky's going to talk a little bit about Daniel Manele. How do you pronounce his surname?
Manele.
Manele.
Yeah.
Yeah. But let me. Should I call him? Okay. Minele. Ehe. Minele. Okay. Let's see where Corky is. Hello, Corky. How's it? I'm putting you onto program because we're about to go on air. Okay. Thank you, Corky. Thank you. We got Pitt and Stephen Nathan here tonight to ask you tough questions. Okay. All right. Okay. Okay. And then, Pitt, you're going to tell us all about the RECM unbundling of
and Astoria, right?
Yeah. It's an interesting story.
Astoria. I think so. I'm very excited. Yeah.
Okay. Okay. Are we ready to go? Right. Away we go.
Stand by. Business Power Hour starts in 25 seconds. 15 seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. Well, we got a full program for you tonight in our virtual studios. Stephen Nathan, who is here regularly on a Tuesday night, and we've asked another of our usual co-hosts, Piet Viljoen, to join us. Piet has been answering questions from the Twitter community about the unbundling by RECM Caliber, which is a listed company, of the Mauritius operation, Astoria. He'll be telling us more about that in a moment. Also, at the top of the hour, we'll be chatting with Piet Mouton, Chief Executive of the PSG Group, one of the major investment holding groups in South Africa. At one time, when Piet's father, Yanni, was running the business, it used to trade at a premium to its underlying assets. Today, it's trading at a 33% discount. Should we be buying? I'm sure Piet will help us to understand that better in a while. And then Ujjwala Satgur, the executive head of UCT Libraries, will be telling us exactly what the university has lost in this massive fire. But our top story tonight is the resignation of Daniel Minele, the chief executive of Absa, for only 16 months. Now, you might recall that the previous chief executive of Absa, Maria Ramos, also left rather unexpectedly. It'll be interesting to find out from Koki Koiman if he's got an inside track on what went down. But first, let's kick off the day with some massive news for Cape Town. And here's Jackie Cameron, our editor-at-large, with today's flash briefing.
Has announced that it will establish its South African headquarters in Cape Town. This is a project that has the potential to create a...
Sorry, we missed the introduction there. Jackie, just start again, please.
Amazon has announced that it will establish its South African headquarters in Cape Town. This is a project that has the potential to create up to 19,000 jobs, more than 5,000 during the construction phase alone, and it will also inject an estimated 4 billion rand into the local economy. The Democratic Alliance says this is welcome news following the devastation of COVID-19 lockdown rules on businesses. It also says that Amazon's decision highlights that the city of Cape Town is making progress in attracting foreign investors. Absa CEO Daniel Minele is leaving the bank, with Absa Group Chairman Wendy Lucas-Bull saying that a separation deal has been reached with Minele, a former Reserve Bank Deputy Governor, and Absa's first black CEO. The reason given by Minele is that he was not in complete alignment with the board on critical issues such as strategy and culture. Jason Quinn, Absa Group Financial Director, has been appointed as interim group CEO with immediate effect. Reflecting the surprise of investors at his sudden departure, Absa was among the worst performers on the JSE on Tuesday, shedding just under 5% of its value. South Africa may soon have a Johannesburg-listed cryptocurrency ETF. My Broadband reports that Signia is set to apply to the Johannesburg Stock Exchange to list a Bitcoin ETF that tracks the price of the cryptocurrency and allows investors to buy into the digital currency without trading Bitcoin itself. Signia's latest Bitcoin ETF plan follows an unsuccessful attempt in 2017 to list the world's first cryptocurrency ETF on the JSE. Signia CEO David Houghton is quoted as saying, "Unfortunately, at the last minute, the JSE decided not to proceed, citing a lack of a regulatory framework for cryptocurrencies as the reason." Signia's fresh move to list a cryptocurrency ETF follows the listing of crypto exchange Coinbase on the Nasdaq. Coinbase boasts a market capitalization of just under $90 billion. Bitcoin has nearly doubled since the beginning of the year to around $55,000, and a cryptocurrency that was created as a joke exploded into plain view on Wall Street at the start of the week, with a surge in Dogecoin sending its 2021 return above 8,100%. That's more than double the gains on the S&P 500, including dividends since 1988. In other developments in the cryptocurrency sector that indicate digital currencies are entering the mainstream, BizNews premium partner The Wall Street Journal reports that a former top US banking regulator is set to join Binance, one of the world's biggest Bitcoin exchanges. For more in-depth analysis and news on cryptocurrencies, subscribe to BizNews Premium, which gives you full access to the Wall Street Journal and other specialist investment insights. As the number of COVID-19 deaths exceed 3 million and India reels from a deadly wave of cases, Tokyo plans to seek a state of emergency declaration in an effort to contain a surge in infections with the Olympics 3 months away. That's according to Bloomberg, which reports that just over 5 million people in sub-Saharan Africa have been vaccinated. This is a region with a population of about 1 billion. Only about 18% of the doses available in Ivory Coast and about 20% in Zimbabwe have found their way into arms, says the news service. Already lagging behind the rest of the world in its inoculations, the wave of vaccine skepticism has been made worse by a lack of trust in local governments and misinformation on social media. Bloomberg says this threatens to put the continent even further behind the rest of the world. And that was your BizNews Flash Briefing. For more on those and the other top stories of the day, do go to biznewsradio.com. I'm Jackie Cameron for BizNews.
Thank you, Jackie. We just had to make sure that you knew it was Amazon that is going to be making a massive statement in Cape Town. You've got to wonder, Justin, we sit here in Johannesburg, in Sandton, the richest square mile in Africa. I wonder how long we're going to hold that title for, because it seems that business is moving south.
And here I am, having relocated from Cape Town, Alec.
Well, exactly, to come and see the action in
to work for
Joburg.
BizNews.
Maybe we're going to have to relocate to your hometown one day.
Me.
I'm sure it is. BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. And here is the relocated Justin Rowe Roberts.
The JSE All Share Index took a beating today, down to 66,800. The highlights, or lack thereof, included British American Tobacco decreasing by 7.7% to 530 Rand a share after the Biden administration warned that the tobacco firms could be forced to reduce the nicotine content in their products to levels they deem non-addictive. Sasol was down 10 Rand to 225 Rand a share on the back of weaker oil prices. PSG fell 3.25% to 68 Rand a share as the company released its year-end results, with investors not flinching despite the sum of the parts calculation being over 100 Rand a share. Brian Joffe's brainchild Long for Life bucked the trend of the day, surging 7.5% to 4.20 Rand after announcing an upbeat trading statement. Alec is a regular Sorbet Man customer, so Mr. Joffe can thank him for his contribution to the uptick in demand.
Did you hear that, Brian? I hope you're listening carefully on that one.
Lastly, Dogecoin's market value now exceeds the market capitalization of all of South Africa's listed banks combined. That's a coin named after a dog. In the currency markets, the rand was weaker against all the major currencies to 14 Rand 28 cents to the dollar, 19 Rand 91 cents to the sterling, and 17 Rand 20 cents to the euro. The gold is flat at $1,774 an ounce. Brent crude is low at $66 a barrel. And the premier cryptocurrency will put you back a shade under 800K Bitcoin.
And this market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. You're not far wrong about Sorbet. They've got quite a nice men's hairstylist opposite our new offices. When we move into our new offices, opposite Ben Moore. I mean, you've never been to Sorbet?
I've never been to Sorbet personally. However, I am a big fan of the gin and tonic. So Fitch and Leeds has seen a big uptick from me with regards to demand.
And I'm a big fan of their Veldskoens. Of course, they rescued my life once. Stephen Nathan, nice to have you on the program. I was in Davos and I had because any time you wear snowshoes is when you go there. And every year I would go there and my snowshoes would come out of the cupboard. And one year they literally fell apart when you were in this place, which is just full of ice and snow. And I was rescued by a pair of Veldskoens, which worked much better than normal snowshoes. So since then, I've become a huge fan of what is a 50% owned Brian Joffe company today.
Sounds good. Lucky you didn't have Crocs with you, Alec.
Yeah. I think Crocs don't work too well in the snow. But Stephen, there's a lot in the news there. We're going to bring Koki Koeman in just a moment. But that resignation by Absa's chief executive, Daniel Minele, taking nearly 5 billion rand off the market cap, perhaps because it was so unexpected. Before we ask Koki to give us the inside track, have you heard anything in particular on why this would have occurred?
I haven't heard anything, Alec, but as you say, really surprising. They delivered a set of results, and he was applauded for, delivering them well, given his short tenure. So he got quite a lot of praise on that, and trying to create some stability at Absa. And it's very concerning because you would imagine that before the board appoints a CEO of a major bank, you discuss strategy amongst other things. So it clearly shows that there was a lack of communication or a lack of adequate planning by the board to find yourself in this position, particularly because I think it's the fourth CEO in about 4 years. So there is a pattern there. And in a bank of this size, you need stability. Clearly it's very difficult for Absa and all the banks given the environment. But just as a side note, one of the things that I think the banks in South Africa need to wake up to, the big four, that certainly is very quickly, is technology. And how do you adapt to this new kind of technology driven world, and these new digital banks and others that are going to eat your lunch. And just out of interest, I went on the Absa website and I couldn't find one person on the board with deep technology experience, and even head of management, I could not find the head of technology over there. So it's I think needs to prepare itself very well for the future, and certainly from CEO that is in alignment with the board.
Wow, how things have changed. Koki Koeman, if you can come in here, you'll remember Alwyn Burger, Dr. Alwyn Burger. He was, when I worked there, he was a colleague who was head of technology. He was then poached by Standard Bank. Clearly, they don't have anyone of that caliber on in the executive that they used to have in the past.
Yeah, no, quite correct. Alwyn was leading in terms of technology at that stage, and although obviously that was a different era, we were exiting the Hogan era, and but Alwyn was his passion, and and Absa let him go.
And and Standard Bank. Well, in fact, Standard Bank also poached the financial director, Simon Ridley. Remember, from Absa. You'd wonder how many Absa executives would be poached by Standard Bank today.
Yeah, it's the whole thing is a bit worrying in terms of the sequence of events. But I think what we must bear in mind that post Maria Ramos's departure, the exec team did a lot of homework, and really it was in-depth stuff and brutal stuff, looking at themselves as a bank and saying what went wrong and where are we now, and they actually shared that with the investment community. And I've seldom seen a bank being so open about the loss of market share in almost every product. And that team started the turnaround strategy, which the bank is still delivering on. And as a team, I think they obviously molded and quite well and started working as a team. And so your problem was almost from the beginning when you get an ex-central banker who's parachuted on top of that team, that potentially there were going to be clashes. Yeah, but I don't think Daniel was a Jose Mourinho where you knew the type of personality isn't going to work for long. But yeah, I don't know what went wrong and where they differ on the strategy. The closeness or the proximity of the announcements on the Absa money market fund and his resignation makes one speculate, but you don't know. And then the different announcements. The second one comes through, adds the transformation issue, which he must have been aware of, and I'm sure he was briefed and it was part of the discussions. But obviously that was an issue with him. But you don't find many black potential CEOs or potential CFOs or top executives in South Africa who've got experience in banking, and it's a vital sector. and you can't just go and appoint anybody. So yeah, the whole thing is a bit of a disappointment. And as Steve says, one would think, and I'm sure they did, that the board did discuss the issues with him, and he must have met the team. And
but
it's a pity.
Just for context, when Maria Ramos left, it was a surprise. Then they appointed Rene van Wyk, you recall, as a caretaker. And I remember meeting Rene, and it's exactly as you say, very open, very humble, very honest man who had no delusions of grandeur. He was there for not even a year, and he was just keeping the seat warm until the new CEO could come along. So you would think what Stephen was saying a moment ago, if you've had a year to get into the market, to go and find somebody, to find the right person, you have to get the values right, and you have to get the communication right. And now 16 months later, the guy that you waited for a year and almost put your bank on hold for has departed. And it wasn't even the previous FD who was this deputy CEO under Maria Ramos. It's not even him who's taking over as the new caretaker. It really sounds like a business in crisis.
Yeah, there are two issues there. Look, firstly, my wife always says I try and defend too many people. So if I defend Absa, then, as I said, in the South African environment where there's so much emphasis on transformation, I suppose they were doing their best to try and find a black CEO, and Daniel actually fitted that. And his macroeconomic background must have weighed heavily. But look, as these things always happen, with time it will come out as to where the clash was. Was it just simply him being theoretical and the exec being too pragmatic and saying this won't work? But it must be very difficult in South Africa to find a CEO that meets all the requirements. But I do agree with Rene van Wyk. It's a surprise. The market started speculating during the day that Rene would then caretake again, and Jason gets a job. And by the way, Jason is very, very, very well qualified, and could mostly take the CEO job permanently as well if he was of colour. But we don't know why Reno wasn't given the chance again. Maybe he himself said, look, it was tough doing it for a year. I'm still enjoying the rest. I don't want to do it again. So we just don't have enough information there. But you've seen a lot of changes in a short period of time.
Okay, so Jason Quinn, tell us a little about him. As you say, he's going to be there for a while because Absa takes their time in finding new CEOs. What should we know about this guy, and will he make any dramatic changes to that company? Because it really is it's struggling in just about every area that you look at.
Yeah, I'd differ there in that it was struggling, and the valuation showed that. But under the strategy that was implemented, it was turning around. Now, look, by the way, I was critical of their growing market shares so strongly, in the sense that we all know that banks that grow market share in a tough environment often take on bad debts. And that could still prove to be the case in 6-12 months' time. But management kept telling us, no, we know what we're doing, and it was just market share we lost of clients that we weren't servicing properly. We changed our offering, etc., etc. So Jason, being there for quite long, and the last 5 years as CFO, I don't think will change much. Being an accountant is conservative and unlikely to change a lot of things. Being part of that team that came up with the current strategy, so I don't expect any change. The interesting thing is, just coming back to the Absa asset management selling or closing the money market fund, we don't know who drove that. But I think that decision on the Absa asset management to look at that was most probably taken before Daniel came in. And maybe that is also one where he clashed with him and said, it just doesn't make sense to sell that or to look at that business. It's been rumored, that they're looking at selling it, and maybe that is one of the areas where there was a clash as well. But Jason, I don't think will change much. I think he's been working with a team that came with a new strategy.
Corky Kooiman is banking analyst at Denker Capital. Stephen, I'm with Daniel Mamele this time on this one. If he was the guy who said, "What, are you crazy to be closing down our 85 billion rand money market fund?" If that's the reason for it, then maybe the other people who should have left the bank rather than him.
Yes, Alex, it's always difficult to speculate when you're on the outside, but it certainly makes, I haven't heard anyone say that it makes sense what Absa is doing with their money market fund. And if you look at banking, it's become, it's very expensive to run a bank, and with capital requirements increasing as regulators get more and more conservative, just the cost of doing business as a bank keeps on rising. So, what banks are trying to do is to move away from being capital intensive to being capital light. And wealth management, asset management, if you can get it half right, is a fantastic business economically, because it requires almost no capital. Your brand really is your capital, because it's third-party money you're managing. So it's very high quality earnings. And if you've got an enormous retail customer base, surely you should be able to sell investment products into that base and diversify your earning stream. Yet it seems like Absa haven't been able to build their wealth management business and sustain it. And it seems as though they're talking about possibly exiting that. So, there certainly are a lot of questions from the outside looking in that it would be nice for Absa to clarify to the market and their customers.
And just to remind you that when they closed the money market fund, we asked and asked and asked, and they refused to discuss it. And all they did was send us a press release. Piet Viljoen, in a different era, I remember you running or being very involved with the financial services sector. When I have a look at Absa now, you had the previous CEO who's now departed, who came from the Reserve Bank. So he didn't have any operational experience in banking. Now you have the caretaker, or possibly, as Corky says, maybe even the next CEO, who's a CA, who has had no operational experience. He's been in the financial, he came in as a financial controller. He then was a CFO of the retail business, the retail banking business, then head of finance, and now he's the chief executive. So it sounds to me, and before him, you had Maria Ramos, who also didn't have any operational experience in banking. So you've almost had a succession now of non-bankers who are running a bank, which should be an advantage when you have a transformative sector, as that is, but it's been exactly the opposite, it appears.
Yeah, I guess so. Look, I think both Corky, who's a bank specialist, and Steve, who you might not remember, was the number one banks analyst a long time ago, probably know it much better than I do. But, it does from the outside, it doesn't look like a good situation. But I think Corky made an interesting point, and that under pressure, I think the executive team of Absa came together and had started to turn the business around. You could start seeing it in the numbers. And I think they probably had coalesced into quite a strong unit. And when the board then parachuted the new CEO into that team, maybe the executive team and the CEO didn't gel, and that led to fallout. So I think actually here, the board actually needs to take a good look at itself and its decision-making process and its ability to gel the CEO with the rest of the executive team. And I think that's what they need to have a look at now going forward. But at the moment, it's not a great position to be in.
It's interesting the point you make, because it is the board that makes the decision, and it is the board that should be taking the responsibility.
Yes.
And in this case, it isn't. It's saying, well, okay, off he goes. We'll now replace him and presumably find someone else.
Look, that's the external messaging. Internally, there might be a completely different dynamic happening as well. One shouldn't lose sight of that.
Have you reassessed or assessed the closure of the 85 billion rand money market fund? Do you think, as Corky suggested, that might have had something to do with Daniel Manele's decision?
I think one can't do anything else than link the two. It's just the one surprising decision followed by another surprise it just looks as if they're linked somehow. And I think there's probably a lot more to this than what we can see from the outside as well.
I'm sure we will get more as time progresses. But Piet, from your side, you've been on Twitter answering questions about your listed company, or the company RECM and Caliber. Just before we go into that, because we're going to talk to Piet Mouton in a little while, the chief executive of PSG. It's quite a similar operation, RECM Caliber, to PSG in some ways.
Yeah. It's. I mean, we aspire to achieve what PSG has been able to achieve over the past 20 years. I think Piet's father, Yanni, did a fantastic job, and Piet has picked up the baton and carried on. But yeah, we're RAC, RECM and Caliber, is an investment company. We hold some investments in operating businesses. And what happened this week is we actually spun out a company called Astoria, which holds all our non-gaming assets and is a Mauritian domiciled business. So that's now separately listed. And the RECM Caliber company now, its major asset is a business called Gold Rush, which is an alternative gaming company, probably the biggest in the country at this point. Effectively what we've done is we've spun off Gold Rush to our shareholders.
You've spun off Gold Rush to your shareholders.
Exactly, because what's left in the RAC share, if you're a RAC shareholder on Friday, today you have one RAC share and one Astoria share for every RAC share you held last week. So in RAC is Gold Rush, is by far the dominant assets. 95% of the assets is Gold Rush, and Astoria, the Mauritian domiciled business, holds all our other assets.
So are you going to change the name of RAC, as you call it, RECM and Caliber?
Not at this point. Not at this point. It's still, we'll see where we go with this. I think the next step is to release the results of RAC, which should come out by the end of June. We wanted to disclose more information on how Gold Rush is doing, but then we needed to get it audited and checked by the auditors, and it was just it created huge costs and time delays in getting the information out. So now we'll just run through our normal reporting process, and we should be in a position to report on RAC and Gold Rush by the end of June this year, in a month or two's time.
So Astoria is the Mauritian listed company.
Yes.
I see that Peter Armitage from Anchor Capital used to be a director. Was this the business that he started over there? And how did you? Well, I know you got involved because they bought the assets that you spoke about for nearly $20 million. But why did you spot this one? And what was the story there?
So what happened with Astoria is that's quite right. Anchor Capital listed Astoria in Mauritius and funded it, I think, with their client funds, and they started managing it as a portfolio investor in all sorts of other listed companies like Facebook and those sort of companies. And at one stage started trading a huge discount to net asset value, and we started buying it up and to the point we achieved control. And then we unbundled, although we sold and unbundled the rest of the assets. So we just had the shell left, and then we reversed all our own assets into that shell. All our assets excluding Gold Rush.
So Astoria now, or in other words, that Mauritian company, is being unbundled to the shareholders of RECM and Caliber. In other words, RAC, as you call it.
That's right.
So presumably you are now going to be a shareholder of Astoria.
That's correct. So as I said, on Friday, if you were a shareholder of RAC, today you're a shareholder of RAC and Astoria, both separately listed. RAC in South Africa on the main board, Astoria primary listing in Mauritius, and the inward listing on the JSE as well.
Because I see in RAC there's a certain Pieter Gerard Viljoen who was appointed on the 17th of January 2020. That's you.
That would be me, yes.
Otherwise known as Piet. So you're going to stay on the board. They're not going to, Astoria is not going to lose you. You're going to continue. You're basically going to be running or be on the board of those two companies in future.
That's correct. Yes, that's correct. So our objective here was to crystallize Gold Rush for our shareholders, because remember when we bought Gold Rush 8 years ago, it was a startup business making losses. All it had was some licenses. It needed capital to build out its casinos and its LPM operations and its sports betting operations and online gaming. So we provide the capital, we provided the guidance, and we provided a home for that company to grow up in. Remember, RAC has a control structure in place. So the reason we were able to buy into Gold Rush at that time is we could protect them from hostile takeovers while they were building up the business the past 8 years, to the point where today they're in a good cash flow position. They should be able to start paying out dividends shortly, and they can stand on their own 2 feet. And that's what we've achieved with that business.
Before we talk to Piet Mouton, the other Piet, how does Astoria trade relative to its underlying value? As I mentioned at the start of the show, PSG is now trading at a 33% discount to the sum of the parts. How is Astoria's relative valuation by the markets?
So Astoria's results came out yesterday. The net asset value at that point was R6.80, and I think it's trading at R3.50, R4 round about there. So it's also trading at about a 30 to 40% discount to NAV. Like most investment companies, these discounts are just too wide.
Can you not then unbundle as Piet Mouton has done with that was a huge unbundling of Capitec. Could you not unbundle your Afrimat shares, for instance?
Well, we've just unbundled our biggest investment in Gold Rush. That's exactly what we've done. So we've just basically copied what PSG did and unbundled Gold Rush, which is by far our biggest investment. So I think we've taken step one, and we'll take further steps to crystallize that value.
Piet Mouton is with us now. Piet, lovely to have you on the program. And it's actually an interesting conversation to pick up from before we talk about the details in your numbers. But my colleague Justin Rowe Roberts was listening to your presentation today, and you had quite a lot to say about what unbundling or the disincentives now that there are to unbundle. Just take us through that argument, if you would, because what you did with Capitec is so different to what Naspers is doing with Tencent, and it would be interesting to see what shaped your view then and whether there would be more unbundlings coming.
So hi here, Alec, and hi everybody. Well, quite clearly, the tax legislation made it quite easy to unbundle, and I really can't fathom why they went and changed the unbundling legislation, because nobody's going to unbundle if 1 plus 1 doesn't equal 3 at the end of the day. So, Treasury had this thing that they want to bring more people into the tax loop. But if you were not paying tax before the unbundling on the single investment, the taxman isn't worse off because now the person owns 2 shares that he doesn't pay tax on. What they have gone and done is made it slightly more difficult to unbundle. So if somebody owns more than 5% of your shares and they're not a tax-paying entity and you unbundle, then you have to pay tax on their portion on behalf of all shareholders, which I think is inherently unfair, but that is now how the legislation is written. If it's a foreign holder, then it also triggers dividend withholding tax. So at any given moment to consider unbundling, you truly have to do a deeper dive into your shareholding base. So I'm afraid if I look at Naspers, they've missed the boat, so to say, because they would have huge number of foreign shareholders that might hold material stakes in the business. I've never looked at the shareholder register, but it could have inherent tax consequences. Remember, there are a number of reasons that investment holding companies do hold the assets, even though they are mature from an influence point of view, like Capitec, which we held on for a very long time. And you got to remember, my ability or PSG's ability to add value was minimal. It's a fantastic management team, but the holding did help us to build other businesses. So You can, in theory, go and unbundle everything and here and there trigger a little bit of tax, but then your firepower is gone because you've got no capacity to raise debt. So, on the face of it, everything might look a little bit more simple, but companies are living, breathing things, and so are investment holding companies at the end of the day. So, sometimes I find it in investor community and the media sometimes look at it a little bit simplistic, and you have to understand there are other reasons why you might hold on to the shares within your portfolio a little longer.
No,
But
there
I
are lots
must
of
say,
lots
sorry?
of complexities, Pete. But before we go into more detail, how is the health of Yanni, your father?
He's obviously got dementia, and it's a illness that progresses. So still see him on a weekly basis. COVID's been very tough because he is in a high risk category, but he's okay. He's just not coming to the office anymore every day, and I think that's unfortunate. It was always nice to have him around.
Well, it was lovely, and for him to have been such an icon on the South African business scene for so long, and I'm sure many people send their very best wishes through you to him. Getting back to when he was running, when he was in his prime, PSG often traded at a premium to its sum of the parts. Now that sounds quite crazy that you've got an investment holding company that trades for more than its liquidation value because of the expectation that there was always going to be another clever deal that would be done like a JSE deal, and of course Capitec and Curo, and we know them all. At the moment, it's trading at a discount of 33% to the sum of the parts, which is, I guess, from your perspective, quite a challenge to try and close that gap.
I think the market will always determine the level of discount at which one trades at, and you've got very little influence over that. We only started truly publishing the sum of the parts in its current format, I think after I actually arrived at PSG. Before that, it was maybe displayed slightly differently. So it's maybe a little bit difficult sometimes to say we were always trading at a material or at a premium to the sum of the parts. I think you do go through periods where things are different, but there's definitely a headwind at the moment against investment holding companies, and I don't think the current tax legislation has helped it any bit going forward. We've also seen a number of investment holding companies making some big errors. I'm not going to mention them specifically, and it does, unfortunately, it does filter down to the rest of the investment holding companies, because the one point that investors have always complained about is the fact that we hold permanent capital, and they don't really like it. If you invest in a unit trust, you can enter and exit at market as long as there's liquidity, but by and large, unit trusts manage themselves that's available, and private equity funds, you invest for a 10-year period and then you get whatever returns the management have given to you. But once you go a little bit down the rabbit hole of I've given some of these guys permanent capital and they haven't spent it wisely and now got to exit to a discount, the problem sort of perpetuates on itself, because you can always argue you can enter at a discount, but if you always got to exit at the discount, it's sort of, well, now we're all trading at discounts. So we can go out there and to a certain degree we can buy back shares. We bought almost 500 million worth of shares back in the last financial year, but you can't do it too aggressively, because on that day or two where you go very aggressive, you just close the discount, and then as you step out of the market, the discount just opens up again. So the sentiment really has to change towards investment holding companies, and until it changes. But it does create a problem. So one of the fundamental reasons of being listed is to be able to access the equity markets. And if you trade at a 30% discount, I don't think that's available to you at the end of the day, and you have just all the bad stuff from the JSE, and you have none of the good stuff.
Stephen Dathan's our guest co-host. I'm sure you know Stephen well. Have you got any thoughts, Stephen, about PSG, or something that a question you'd like to pose to Pitt?
No, I think that Pitt's his observation about the unit trust and private equity, I think, is really interesting, because that was also on my mind. And if you look at why do we invest? Why do people invest? You invest because you want to maximize your return over a time horizon. And I think what would be interesting, if you took a 10-year time horizon and you took a lot of these, you took PSG as an example, and other investment holding companies, and you looked at the return they've given in terms of you have to look at a net asset value. You could probably look at both share price and net asset value. But if you look at the return, I think most of the investment trusts, if you look at the fees that investment trusts charge, I mean, the total expense ratio of a lot of these funds is still sitting up to 2%. So you're anywhere between 0.5% and 2%. I don't know PSG's ratio, but I'm sure it's materially lower than that. And you're buying in at NAV versus an enormous discount. So there's a structural challenge that investment trusts have. And if you look at private equity, I mean, what's interesting with private equity is they always talk about, one of the reasons that you sold private equity is because it's an uncorrelated asset. What does uncorrelated mean? It means that normally people say, well, when the stock market falls, the price or the value of a private equity doesn't fall, and that's mainly because they don't mark to market their assets, not because their assets operate in a different in a different universe. So there's there certainly is a structural challenge that investment trusts have, and as Pitt says, I mean, I can also remember back in the day as an analyst where we would either you'd value a company and you'd put on some kind of controlled management premium because of the deals that we're going to do in the future. And I guess the challenge is the market is what it is, and you can't, as Pitt said, you can't influence the market, but it's kind of what do you do from here? And one of the challenges when you're running a private equity or an investment holding company, or even a venture capital, what's interesting with a venture capital, if you look at the US, which is a great market, it's not comparable to South Africa because of the size and the opportunities. But typically in venture capital, they will make lots of investments. They make up to 100 investments in the knowledge that many of them aren't going to succeed. And your best performer normally generates more than everything else. So failure rate is high. And I think in South Africa, you've got and I guess the market is saying, well, how often can you get a Capitec, and what is going to follow there on? So, obviously what the market wants to know, what everyone wants to know is how do you create value? Do you create value because you're going to grow the net asset value much faster than the overall market, or you're going to unbundle, some way? And I think that's the challenge. And I'm sure Pitt's been asked this, many times, and he's got a lot of their own money tied up in that.
Well, he's got all the family money is presumably heavily invested here. Pitt, what is your answer to that question? Lightning doesn't strike twice. Naspers isn't going to get another 10 cent. It's asking a bit much of you to get another Capitec. But what is your horizon and your ambition?
It's firstly, I would just like to say I'd love to get another Capitec, but I think we've got to be honest with each other that Capitec was the best business created in the last 20 years in South Africa. And I agree with your sentiment on Naspers. It was probably one of the greatest trades ever, and you can go and write a book about it. But you can't go out trying to achieve that again. I think you're just going to be horribly disappointed in yourself and your abilities. But I do think from about 2010, we've analyzed the remainder of the portfolio, excluding Capitec. That returned about 15%, and it hasn't been a great economic environment. I think GDP, if we exclude the 7% that we've come back, was about just over 1% or 1.5% over that period, and the rest of the portfolio did 15%. Now, if you ask me if we can continue investing and delivering 15% returns for shareholders for the next 10 years, then we're going to be 4 times the size, because it's quite a nice, easy calculation. You get to double every 5 years if you grow at 15%. So we don't have to find absolute rock star investments of the likes of Capitec, but we can aspire to it. And if we fall a little bit short and do 15%, I think we at least will be more than happy. But I do truly think it's going to get tougher before it gets better. I mean, we were all very hopeful when President Ramaphosa came in that he was going to make some structural changes, and I don't know whether he was going to be able to do it, because just as he was getting going and we had the Zondo Commission and everything, we had COVID. So I don't know. Hopefully he'll make the right changes and we can move forward from there, because it's very, very difficult to build new businesses in a very constrained environment. I do think it's worthwhile to go back. When Capitec started, it was in that golden period. I think between 2000 from about 2002, 2003 till just before the financial crash, the GDP in South Africa actually grew by 5% per year. It's a significantly easier environment to grow because everybody is chasing revenue. It's not about cost cutting and competing on market share or trying to divvy up a market that everybody, if you want to grow, you got to go and take a slice from somebody else. They could build a business in an environment, and look, I'm taking nothing away. They built a brilliant business, but all of the other banks were looking at their own growth environment and ignoring this upstart just because there was so much business to do. Where at this stage, everybody's looking at what everybody else is doing, and no, it's a little bit more difficult for people to try something alternative because they know if it doesn't work, then perhaps they've wasted money, but if times are good, then people are more willing to try something different. I mean, those are just realities. I do think we still got to try our best to be able to maximize the returns for shareholders.
Pete, thank you, and thanks for your contribution tonight. It's always lovely getting the insights and the wisdom from the PSG top guy, and all the very best to you and your family as you go forward in your search for yet another unicorn. I'm sure there's one just around the side in Stellenbosch there somewhere. But good talking. Good talking with you, Pete. Thanks again.
All the best. Cheers. Bye.
Bye. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Last night we had an interesting insert with Rob Hersoff, who's, it seems like we're talking to Cape Town. It's what I was saying at the beginning of the program. Business has moved south.
Alec, let's do it. Let's relocate. I'm all in.
Well, I'm sure that Rob Hersoff would welcome us with open arms, particularly if we were prepared to play paddle. So now this entrepreneur has brought a new sport to South Africa at the end of our conversation on non-fungible tokens. Fungible tokens, which is something that I'm going on a crash course on because it has massive disruptive opportunities. I asked him where he was going, and he said he was going off to play paddle, which is his new investment in South Africa. At the end of this conversation, it's a very short little clip, he also tells us about the Africa gold mining SPAC that was listed on the New York Stock Exchange and has raised even more than the $350 million that dollars that he expected last time. Let's have a listen in. It is extraordinary, Rob. So you're disrupting this industry, but now you want to disrupt a game called paddle. Tell us about that.
Listen, Alec, your audience are going to be sick of me by now. They're going to get not another mad idea from this crazy dude. So I'm going to have to take time off from BizNews for at least a week. So paddle tennis is the fastest growing sport in the world. It's spelled Padel, tennis, and it's from Argentina, Mexico, Spain, the Hispanic world. And I played my first game 20 years ago with a buddy when I was down at Valderrama. And it's just fantastically easy to play, hard to be good at. And it's almost like squash outside. It looks like a small tennis court, a third of the size, but it's got back walls. And if the good courts have got glass, perspex. And it's a doubles game, and it's fast as hell. It's easy to learn. It's difficult to be good at, and it's just such fun. It'll be an Olympic sport very soon. And we've launched Africa Paddle. We have the rights to Pan-Africa. Within the next 3 weeks, we'll have 10 courts built and operational in Cape Town. And we're going to spread out across South Africa and across Africa. And game number 1, 5 o'clock today at the Rotunda in the Bay Hotel, Camps Bay.
Who are you playing against?
Philippe Schellegren, Swedish. Risto Salander, Swedish. There are a lot of Swedes that are in South Africa that have got behind this. And then they've dragged myself, Pierre Duprier of Birkenstancher, Craig Stanley, who's sadly taller and better looking than me. But I think his shorts are going to be a bit too tight. And Hans Otterling, the great friend of mine, who's a principal at Northzone, the most successful venture investor outside of America, 12 unicorns. So it's a group of Africans, South Africans, and Swedes. I don't know who my partner's going to be, but I've self-appointed myself as the senior African paddle champion. Seeing as I've played no one yet, I'm the champion till I'm beaten.
Rob, before we let you go, the SPAC, how's that developing?
So we ended up raising $414 million, 4 and 4. We were at 300, 6 times oversubscribed. We were disciplined, only took 360. We could have taken a lot more. And then the broker played the shoe. Basically, they had an allocation. We're at $414 million. So the team's in place. Chris Chadwick. We've got a fantastic board. Brad Doig, Kusen Kallium, you probably know very well, Michael Rawlinson. We've identified, I think, 9 great opportunities. We're in discussion with all of them, and that's about as much as I can give you.
Pitfulion, how easy is it to raise $414 million, or call it 6 billion rand on the JSE nowadays?
Rob makes it look very easy, but I think it's just about impossible unless you come with a Capitec or a Tencent. It's very hard.
But there he goes to America. He goes onto the New York Stock Exchange looking for $300 million. Next thing, he's ended up with 414 or 6 billion rand. It just shows you the way the business is going. You got to go offshore.
Look, I mean, market conditions in the US are very different. SPACs are quite popular at the moment. It's fairly easy to raise money with SPACs. You just have to have a couple of good names behind and a fairly okay sounding plan. And it seems like you can raise money. It used to be like that in South Africa 10 years ago, 12, 15 years ago. It just dependent on the economic circumstances. And right here, it's, investors locally all want to invest offshore. No one wants to invest here. So it's very hard to raise money on the local stock exchange. And until those conditions change, until we get some confidence back in the economy, until we get some growth back in the economy, it will remain very difficult to raise capital on the stock exchange.
Well, let's hope that it's a little easier to help University of Cape Town get beyond the damage from the fires. We welcome now Ujala Satgur, who's the executive head of UCT Libraries. Ujala, can you just give us some sense of how much damage the Cape Town fires have done to your domain, to the libraries?
Hi, Justin, and thank you for having me on your show. And we can certainly do with a slice of that $414 million. So I'm going to put in a plug for it as well. The Jagger Library at UCT Libraries has been completely gutted. And we're looking presently at damage and destruction to the building, the edifice. Collections have been completely destroyed, and we are going to have to engage in a complete rebuild of this particular entity. Part of the destruction, or rather part of the collections that we've lost, are some very valuable collections as well. And at this point in time, based on my assessment and the technical team's assessment today, we are confronted with the added burden of water damage now to other collections on a lower basement level. And this is from the seepage of all the water that was used to douse the fire on Sunday.
When are you likely to be able to move back in?
Oh no, we won't be able to use that building because it's completely devastated. Thankfully, though, it is just one of 3 buildings that make up the UCT library. So this is going to be a construction site for many, many months, if not a couple of years, because that's going to have to be reconstructed. Although the edifice is still intact, it's been completely gutted inside. So that building will not be able to be used.
Ujala, I understand that the Jagger Library is no longer. What about the Chancellor Oppenheimer, the main library at the UCT campus? I saw the fire was extremely close to the Chancellor Oppenheimer, and I could only imagine that there's some very important literature, original literature in that library.
Well, as I said, it's a part of 3 buildings, and so the main library is intact. That hasn't been touched at all, and this is due to the infrastructure that we had to prevent fires from spreading within the building, and that was, the fire detection systems. We had the fire shutters, etc., that kicked in immediately. The alarms went off, etc. So that prevented the fire from extending into other parts of the library. Our main collections were housed in Jagger. Our general collections are housed in the main library. So there are huge distinctions between the collections that we have. And so we're now faced with having to assess the damage to our rare collections, our unique collections, and, special collections that we are host to at UCT Libraries.
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Justin?
The JSE All Share Index took a beating today, down to 66,800. The highlights, or lack thereof, included British American Tobacco decreasing by 7.7% to 530 Rand a share, after the Biden administration warned that the tobacco firms could be forced to reduce the nicotine content in their products to levels they deem non-addictive. Sasol was down 10 Rand to 225 Rand a share on the back of weaker oil prices. PSG fell 3.25% to 68 Rand a share as the company released its year-end results, with investors not flinching despite the sum of the parts calculation being over 100 Rand a share. Brian Joffe's brainchild, Long for Life, bucked the trend on the day, surging 7.5% to 4.20 Rand after announcing an upbeat trading statement. And lastly, Dogecoin's market value now exceeds the market capitalization of all of South Africa's listed banks combined. In the currency markets, the rand was weaker against all the major currencies, to 14.28 Rand to the dollar, 19.91 Rand to the sterling, and 17.20 Rand to the euro. Gold is flat at $1,774 an ounce. Brent crude is low at $66 a barrel, and the premier cryptocurrency will put you back a shade under 800,000 Rand a Bitcoin.
Just unpack that Dogecoin story. I thought it was a joke.
I told you that investors are leaving Bitcoin into a more investment-grade cryptocurrency such as Dogecoin. It's sector rotation.
Peter, are you a Dogecoin? Are you following Elon Musk into Dogecoin, or are you just
I heard about Dogecoin today for the first time. So no, I haven't had the opportunity to sell my Bitcoin and buy Dogecoin yet.
Market cap of all South Africa's banks combined. Stephen, Nathan, doesn't that make you feel a little bit jaundiced? At least either that our banks are underpriced, or that they're the same value as a coin that is supposedly named after a dog.
Yeah, I think as Pitt said, there's something happening in the US that we're not part of. There's interest rates. Basically, they're giving money away for free. You can raise as much money as you want and make as much money as you want. So, there's an enormous financial party going on that we're not part of. But, my 16-year-old son, Sam, he's on Binance, and he's making a lot of money, and he thinks I'm a complete idiot because I don't know anything about cryptocurrency. So, if you want a recommendation from him, if it was up to him, he would say he should rather be on the show than me.
Well, they did that on Bloomberg a while ago, where they had one of the market commentators and his son. And it was interesting because he gave his son a challenge. And his son said, well, now you'll double his money this week and the week thereafter and the week thereafter. I mean, these are just returns that are taken for granted now by the bulletproof youth, but of course don't tend to be sustainable in the long term. As you say, a party's going on. Just quick response from the two of you. Are we going to be part of the hangover when it finally does come? Stephen?
I would, sorry.
Pete? No, carry on, Pete.
I think, unfortunately, that old cliche, when the US sneezes, the world gets a cold, and certainly emerging markets. So, to some extent, we have benefited. The currency has benefited. We're able to reduce interest rates, to record lows in South Africa. And the stock market has had a bit of a rally, albeit off a low base. So we've had some benefit, but nowhere near the benefit. But certainly, I think that when things, if interest rates, when they rise and when the US comes off the boil, you're probably going to see us suffer quite a bit with capital outflows and pressure on the currency. So I think we will be impacted. But I'll be interested to hear Pitt's view.
Quick one, Pitt.
I think we will be impacted, but at this party, we're in the kitchen, and there's a lot less alcohol around the kitchen than there is out there in the living room right now. So we will be impacted, but I don't think as much as some other places.
You'll always find him in the kitchen at parties. This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Thanks, guys, for the contributions tonight. We'll be back again tomorrow, 5:30, same time, same place, from the BizNews team. Cheerio.
Thanks. Cheers, guys.
You've been listening to the Power Hour, brought to you by the team at BizNews.